Hello and welcome to the Cryptocurrency News channel. Well, the FTX thing is bad, but the thing is there are some good things to come out of the FTX thing. There's like one good thing, and that is exchanges are becoming a lot more transparent now, and they've actually released their assets and their safe funds. What we're looking at right now is Bitfinex, and basically proof of reserves. They're releasing proof of the reserves. Basically, it's been released on GitHub. So Bitfinex holds 204,338 BTC among top Bitcoin holders. Basically, there's over 2,000 BTC liquid, 1,000 BTC on Lightning, and over 1 million ETH as well. So they actually have liquidity if people actually want to go with withdrawals. So KuCoin has also released, and Binance has also released. Now this is very good. We've always want exchanges to be more transparent, so it doesn't happen to other exchanges. And it seems like a lot of the other exchanges, unlike FTX, do actually have reserves. We've known that Binance actually does have reserves for a while now because they've actually used those reserves to pay back people when bad things happen. A lot of us were suspicious of Bitfinex, but Bitfinex has them as well. We know that Tether has them because they've done over $10 billion in redemptions, and that's actually what's kept Tether afloat. So seeing these numbers from these exchanges is definitely a good sign. Now, what I do want to see is what the exchange's liabilities are. Because, if your liabilities are greater than your assets, then you're really not as solvent as you make it out to be. So it'd be nice if they would completely release their books, like a lot of public companies, to give people more, and be audited, to give people more confidence in them. If you're a big centralized exchange, I don't think you can go with since you guys don't want to do KYC AML, we don't want to have any transparency either. These exchanges are handling billions of dollars of people's assets, and I think for people to gain confidence, they have to agree to be audited, and they have to agree to show their reserves and what they actually have. So that's definitely one thing that the market will change after this FTX collapse, because everyone thought that FTX had some reserves, but they didn't have any at all. So we're going to want proof of these big exchanges actually having the reserves to back people's withdrawals. Remember, exchanges, unlike banks, are not FDIC insured. So if it collapses, you don't guarantee your $250,000 or however much. And I think the exchanges are one step further away from FDIC insurance now, at least on crypto assets after this whole Bitfinex fiasco. The industry also needs regulation rules, like you cannot use a coin that you minted as collateral to borrow money, because the reason FTX actually collapsed is because Alameda Research basically had a bunch of minted FTT, and they used that FTT as collateral to borrow money from FTX. But of course, once everything started falling apart, FTT value started falling, so their collateral was actually worthless. So what we want to see is the collateral that you hold, or the liquidity that you hold, consists mostly of not your own coins, because that's what FTX's problem was. So that's one thing that's good that's happening. Hope they become even more transparent. And yeah, I think that's just good for the industry if they become more transparent. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.